Merry Christmas from Aggie Land, and welcome to the December 2023 housing market update for Bryan College Station. I'm Greg Schwartz. I'm here to tell you things haven't really changed when it comes to housing prices, but we don't expect it to stay that way long given the dramatic change in mortgage rates. Stay tuned to find out more.
So we're going to start off with College Station. Notice I'm looking at single family existing homes. So we're taking new construction out of the picture here. The median price point is much the same as it was last year with very little change. Closed sales are down, active listings are up. So we're seeing months of inventory climb. Again, this is similar data and similar trends what we've seen for the last few months. Days on market are up. Again, we've seen that trend year over year for the last few months. The blue line here, which I like to look at, is the median price growth. It's a 12-month moving average, still up. So the 12-month median price is still growing at 6.4%. I also like to point out the median price per square foot up 3.6%, just another indicator of the appreciation of the market. Interesting to note, the next three data points, median home size, 1,843 square foot, median year built, 2002, and closed to original list price. Again, this is the price that a house sells for compared to how it originally gets listed. So houses are either having price drops or buyers are negotiating down the prices to roughly 97.2% of the original asking price. So let's check out Bryan real quick. Again, much the same. Our median price hasn't changed much year over year. Closed sales are interestingly up for the month. That's a number I did not expect to see. I'm not quite sure what's driving that. But active listings are also significantly up, which is driving our months of inventory up. Notice months of inventory are at 3.3, which is higher than College Station at 2.2. So there is more demand for College Station than there is Bryan right now. Days on market are up year over year. Our blue line here, the median price growth, 12-month moving average at 3.1, showing some appreciation there. The median price per square foot up 5.3% year over year. And check this out. If you really compare apples to apples, the median price in Bryan is roughly 10% less than College Station. And that's a really good rule of thumb I've used in the past is that Bryan is roughly 10% less expensive than College Station. The median price is also smaller by about 200 square feet, and the median sale price is older by about 20 years. So Bryan is just a little bit cheaper, a little bit smaller, and a little bit older than College Station, and our ratio of original list price to final sale price is at 95.1%. So properties are selling for roughly 95% of what they originally listed at. So don't be afraid to come in a little under asking price. This is all much the same, but I don't expect it to stay that way. And that's because of the recent change in mortgages. So this is where the real news is for November and for our market update here. As we sit December 15th, we're looking at mortgage rates that have dropped back down into the mid sixes. So we haven't seen mid sixes since the May-June timeframe of 2023. So the much the same that we've seen in September, October, November was largely driven by mortgage rates over 7%. July and August affect September and October's sale data, right? We lock in rates, and then about a month or two later, we buy the house. So if rates are being locked in now under 7%, I expect 2 months from now, February and March, to see prices having increased. I expect there to be more buyer activity, which will will increase closed sales. It will likely lower the months of inventory and may create a situation where we see houses begin to appreciate again. So what does all this mean? Well, if I'm a seller right now, I might take a tactical pause. I might not list my house until March with the intent of um, taking advantage of lower interest rates, which will increase buyer activity, and the natural phenomenon of the seasonal increase in buyer activity in the spring. If I'm a buyer, I want to get out of the gate early. I don't want to be in a feeding frenzy. So I'm going to start shopping in January and February with these low rates and these prices that have otherwise stayed flat for the last little while. For my investors out there, the good news about lower rates is the same as my buyers. We now have a situation where we can get closer to that cash flow we've all been waiting for. So if you're a cash flow investor, now might be a good time to start shopping again, seeing what price points you need to offer on to get your cash flowing properties. In either case, I hope that this video helps somebody out there. I hope that you like and subscribe to my channel. And until next time, take it easy.